Welcome to week 4 of our Forex trading school. And in this week, we'll be looking at two major lessons. Number one lesson we'll be looking at will be master candlesticks without cramming them. And the lesson 2 will be one of my biggest secrets in this financial market industry. What is this first secret? It is applying the concept of product life cycle in Forex trading. Remember that we are just using the general term Forex trading to talk about every market in the financial market. If you had followed us from the week 1, you remember that I said Forex market is only a segment of the financial market generally. So if you are into stocks, you are into commodity or crypto, these things that we are teaching is also applicable to any market that you choose. Okay, let us begin with lesson 1. Mastering candlesticks without cramming them. There are different kinds of candlesticks that traders tend to cram and take note of. That is to say, in simple terms, like the shape of candle that you will see, you will know that the bulls are in charge or bears are in charge, that is sellers. Examples of these candles are the hammer, piercing pattern, bullish engulfing candle, some they call the morning star, 3 white soldiers, and so on and so forth. I'm not interested in teaching you these different candles, their name, recognizing them, all right? Because when it comes to profitability, no major investor really care about the names of all of these patterns. Okay, now let's move into the chart proper. The very first concept I'm going to be using to teach you how to master candlesticks without cramming them is momentum. So, what is momentum? Remember that I taught you last week that there are two parts of a candlestick. The first part is called the body, which is this, and the second part is this, which is called the wick of the candle. Now, the length of the body of the candle is what I term momentum. When you have a big body with little or no wick, for instance, this, we have little or no wick bullish candle. What are we going to say? We say that what? The bulls are in charge. It shows a symbol of strength. But when you see a small-bodied candle, you know that what the bears, who are people who push price down, don't have enough power yet to push price down. So the body of the candle can tell you the power of those who are winning or those who are losing. Now look at this. Look at what we have here. Over how many weeks? We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. For 21 weeks, we have very small bearish candles of almost the same size. I'm using USD NGN. For 21 weeks, we have a very little power of the bearish people acting on USD NGN. And what did we see next? We saw a bullish candle next. Let me take off this. We saw a bullish candle next. Bigger in the body than the previous bearish candles. Okay. Now, we continued like that. Okay. It kept increasing. The next thing, market continued shooting up. Bullish, bullish, bullish candle. And then one bearish candle came all the way here and covered how many? If you check the date of this bearish candle, people were like, wow, there is hope for Naira value. And then the next thing you see is boom. This is what we call retracement or pullback. Now, if you understand the financial market or price action very well, you can tell what is happening with the currency of your country. Okay, and then what happened the next thing, we have a very strong bullish candle for the week, the next week after this red candle. And then the next thing, look at the small red candles that we have here. Then look at the momentum of the last weekly candle we have here, from here to here. This is a very strong momentum. So the bigger the body of the candle, the more you interpret this as what? Strength. You can't see this kind of momentum that we are seeing right now and then he'll be thinking of selling. You can't be thinking of selling yet in this kind of scenario. Okay, you need to wait until you confirm that the momentum of the bullish people has decreased, and you can obviously see the momentum of the bearish players. So momentum is one thing that would help you to interpret the strength of the two fighters. Okay, you just look at this candle and you're like, oh, okay, the bulls are in charge. Let me look at another pair. Let's look at Rolls Royce. Okay, this is stock. I've been using Forex and commodities to teach. This is applicable also in stock. You can see the momentum from this. We have little candles. Here is a point of indecision. We are coming to this very lesson that will interpret this kind of scenarios for us. But now we're talking about momentum. From this very point, you could know that the bulls are in charge. What do you see next? A very strong momentum from the bullish people. You can't be suggesting a crash in this stock at this point. Look at the strength of buyers. So you have to wait, or you have to do what the winners are doing. So this is a sign of bullish strength. Okay, bullish strength. All right. This is a short bearish this thing. They are not yet in charge. They have not yet covered even one bullish candle. So, and then suddenly we started having short bullish candles. Even from here, I should be careful. Short bullish candles. What do? If you have stock with this very company, you should start thinking of what? Taking your profits. All right. So now from having small bearish candle, we started having big bodied, that is big momentum bearish candle, and then we have this again. I should be thinking that what? Now the bears are coming in. Now this is how you can use momentum to interpret price action. Now the next concept I will be using to teach you is break of candle. What do I mean by break of candle by a previous candle? Look at this candle stick, and then the next thing, an opposite candle, which is the bullish people. Now they came above this last red candle. They call it engulfing candle, but I don't want to start using all of those terms. I don't want you to go cramming anything. I want you to see this financial market as it plays out in real life, so that it will be more interesting to you. Suddenly the bullish people came and pushed price above how many candles? 1, 2, okay, 1, 2, almost 3 bearish candles. What does this tell you? The bulls are coming up. That is what the interpretation means. That is what I mean by break of candle. That is a candle breaking above or below the opposite candle. All right. Now look at this. After this bullish candle, we have bearish candle too, but they did not come below the bullish candle. That is to say, the sellers, they ride all the way down. Since they did not come below, I am not worried, I'm not bothered. What will I say? I will say that, oh, the bulls are still in charge. But the moment we have a bearish candle that comes below here, I will be worried. Okay, I'm like, wow, it's like the bears are having more momentum, they are having more power than the bullish people. Okay, we now have much people trying to push price down. All right, so I am not worried here. And then the bulls came up again and keep moving down, and suddenly a bearish candle surfaced here, and then they came below this. This is a bullish candle. They came below this. Now, this should make me be watchful, like, wow. And this is a weekly candle. It's a higher time frame. the higher time frame we have, the more accuracy we should have in terms of interpreting the price action. Please take note of this. I'm still coming to teach us the law of large number as you apply it in the forex trading. Okay, take note of this very thing that I'm teaching you right now. When you are in a higher time frame, you don't begin to look at this in 1 minute, 5 minutes, 15 minutes. Okay, when you are in a higher time frame, monthly, weekly, daily, 4 hours, these very things are very, very important. All right, so now we kept on moving. We have a bullish candle that never went above the previous, so it tells me that, oh, the bears are in charge. And then we have a bearish candle again that went below this. Okay, now we must leave here right now. We must, if I've been with the bullish people, I will tell myself it's time to take my profits. Okay, so that is how to use break of candle to interpret price action. Look at here also. Look at this point. We have bearish, and then we have bullish come all the way above. It's a sign for me that what? The bulls are back in charge. And what do we see? We go all the way up. This is a way you can use break of candle to know the people that are in charge, to understand price action, to understand candlesticks without looking at cramming. What is it called? What is it called is not going to put money in your pocket, for goodness sake. Okay, you just need to interpret it based on the action of investors or the market makers that push the markets. Now, the last but not the least is interpreting the candle using price rejection or the wick of the candle. The wick of the candle is called price rejection. For instance, when you see this candle, this bullish candle here, you can see it has a long wick. Do you know what this means? This long wick is called price rejection. What it simply means is this, that the bears, in as much as this is a bullish candle, price opened here. Remember, for a bullish candle this way, price opened here and price closes here. And I told you that wick simply means that what? In between that time frame, for instance, this is a weekly time frame. Within that week, price was actually pushed below by the bears and also pushed up by the bulls above the closing price or below the opening price. This is a bullish candle. What this week means is price rejection. It means that price was pushed down by bears but was rejected. Price rejection. It also means that for here, the price was pushed up above the closing price, but was rejected. So, week of the candle simply means rejection. Rejection of negotiation. It means that what? When price got to say $2,000, if this is to be $2,000, when price got to $2,000, that the major investors, they rejected price. They rejected investing at that very price. Or it can even mean that some persons took their profits at this point, so the momentum reduced. The number of people who could hold price up to that place reduced, so we had a drop of price so that much people can enter again and push price higher. So instead of taking your time to cram the names of these candlesticks, you can easily look at this candle and interpret it as an intelligent investor, that this simply means that the bulls are in charge, but the bears tried to push price lower to this point, but the bulls said, no, we are going to push price higher. Okay, that they are what? They are winning the fight. So when you see something like this, look at this place. When you see something like this, whereby the candlesticks, there is literally nobody, something like this, literally nobody, nobody of the candle, more like a cross, whether this way or that way. You know what that means? It means that the momentum is equal between the bears and the bulls. It means that the momentum is equal between the bears and the bulls. Nobody is actually winning. And that is why you see this kind of stunted movement. Nobody is pushing up, nobody is pushing down until we saw this candle and we see that the bulls are now back in charge. Remember, you must look at the forex market as a battleground between the bulls and the bears. That is the buyers and the sellers. People who want the price to go up versus people who want the price to push down. You must have this mindset the moment you approach the financial market. So that is it. These are the three ways you would know what candlesticks or interpret price action without cramming the names of the candle. Interpret them based on the reality of what is happening in the forex or financial market generally. Now let's move over to lesson 2. And I'm going to be teaching you one of the biggest secrets of the financial market. The moment you grab the lesson 2, you have literally grabbed an important concept that will help you to make right decisions in the financial market. See you in lesson 2.